Now, if you're living in certain neighborhoods that are, pre-gentrified, and there's some, difficulties in the neighborhood, and there's some boarded up homes. I think about early 90s Baltimore. I think of like there's rows and rows, and outside of Richmond, I remember, visiting, taking my
Yeah.
brother to school to Virginia Union, and there's like this whole pocket of like boarded up row houses. If I and a few friends and cousins, first time, you have to be a first time home buyer to be a
No,
part of.
no, you just got to be, owner occupant. When you close, you can't own another property at that time, but you could have previously owned property.
Okay, so you cannot. So if right now you don't own a property
Yeah.
and you're thinking about it, this is the way to go, because y'all can get together and buy a block, 4 or 5 houses. And I was saying this last time you were here, and I've been saying this all along. We live in neighborhoods. Instead of running out of our neighborhoods and making other people millionaires, which we do, we go to these nice neighborhoods with schools that teach our children to hate themselves or not to even know about themselves. Let's stay where we are and have a strategy around flipping our own neighborhood into into the spaces we want to be in, right? So it's possible.
Oh, it is more than possible, because let's just take a step back. One of the elite schools, the people that look down on everybody, Harvard, right? I'm in Boston, but we never go over to Cambridge because we're tired of those liberal elites looking down on us and think that they know all the answers. But one of the things that Harvard did a study is they said that if you live in Baltimore, the only way you can improve yourself is to move out of Baltimore into a predominantly white, higher income area. Well, that's wrong. I mean, that is just completely against everything that we stand for or should stand for. We should be able to live in the neighborhoods that we want and to stabilize those particular neighborhoods. But let's take Baltimore, as you mentioned, as an example. There are 13,000 abandoned houses in Baltimore. Only 2,000 of those are owned by the city. So the rest are owned by absentee landlords. And something awful happened a couple of weeks ago was that 3 firefighters were killed because there was a fire in one of the abandoned houses in Baltimore. And the owner of that, the absentee landlord there, has been paying $200 a year to own that property. That's the max. That's the taxes that they're paying. Well, what they're looking at in Baltimore, and with City Councilor Nick Mosby is saying there should be a nuisance charge. There should be a tax on, or a fee on those absentee landlords who have abandoned properties out there, because that destabilizes the neighborhood and it puts the firefighters and others at risk. And sometimes they die trying to do the right thing out there. So there's an opportunity in Baltimore and in Richmond and St. Louis and in Memphis and around the country to say, you're exactly right. A critical mass of homeowners in a neighborhood you can have beautiful, affordable properties, and then put the pressure on the city to say, we want services. We want services out there. So one can come through NACA, yes. And in Baltimore, you're going to be able to buy one of those properties for $1, just $1. Now you might need $80,000 or $100,000 to renovate the properties, which we would provide. So you could take that house for $1, renovate it, customize it to the way that you want, and then to work with the city to make sure that you have magnet schools in the neighborhoods. You have after school programs in the neighborhood. You have good education opportunities and good job opportunities. And that's the future out there. And that's going to happen. It's going to happen soon in Baltimore. It's going to happen soon, we hope, in other parts of this country and in those neighborhoods. So one doesn't have to, move out to move up. One can stay and can be comfortable there.
I'm gonna offer something. Let's stay in Baltimore for a second. 866-801-8255, because we have a lot of listeners in the DMV area. Say I'm a parent and I have a child who is, just graduating from college, or maybe I even have an 18-year-old. who I want them to buy their first property, and say I get together with other friends and family members, and maybe we all have children around the same age, because I think, we got to start them young. And there's that block, one of those 13,000, 11,000 properties, maybe it's the 2,000 that the city owns, right? That we can get for $1. So how, is there an age limit, first of all, Bruce?
No.
Okay, so
No.
my 18-year-old who has never owned a home before, and my cousins and my sisters and brothers, 18-year-olds, we can look at a block in Baltimore, and this requires a little research, right? Drive around, say this is the block, right? Let's see what's around the block. And is it near stores? Like, is it near a highway? And we take maybe 7 houses on that street, because again, strength in numbers and strategy and planning. Our children apply. Walk us through the application process where they can get the house for $1 and then the renovation loan. And then how long do they need to stay on the property before they can either sell it or, buy another property?
So the way it would work is that, yes, there's going to be a list out there of all those properties. So the ones that are city owned, but also, you're going to have an opportunity to buy some of the other properties out there, the ones that are abandoned, that have re-boarded up. So you would go through NACA, for example, and you do a home buyer workshop, and everybody comes through NACA would get access to our Best in America mortgage. No down payment, no closing costs, no fees, at a below market fixed rate. So if you just play that out for a second, what is the major roadblock for someone who wants to be a homeowner? One, it's tough to save money for the down payment and the closing costs. So through NACA, no down payment and there's no closing costs.
Y'all hear that? Wait, no down payment, no closing costs.
Meaning the bank eats all the closing costs. Number 2 restriction is that you have restrictive underwriting based on credit score. Well, credit score is not an accurate reflection of people's reality. So the fact of the matter is, at NACA, we never consider one's credit score. We look at the payments that they control. So for example, if someone has late medical payments, that's not a reflection of whether they're ready for home ownership. That's a reflection that we have an unaffordable, dysfunctional healthcare system in this country. So
Preach, Bruce. Sorry.
No. So absolutely, my friend. So you look at the payments that they control over the last 12 months, and you focus on that. Because, people have done things, we've all done things in the past, so you don't want to hold that against you. So
let me pause there. So, but an 18, 19, or 21-year-old may not have a credit history at all. What do you do about that?
Fantastic.
Does that matter?
No, because you can always look at other, most important on payment history is, what are you paying in rent? And have you paid your rent on time? That's the most accurate reflection of whether someone can afford that mortgage payment.
So if a parent I'm walking down this because I need us to be set up for generational wealth. I have a child. I should charge my child rent. I should set up, would that count for NACA? If I have, for the last year, my child has paid every month rent to us, and there's a record of it, and we have a lease agreement, and we hand that to you.
Yes, that works, Karen. Also, what works is if I am living at home, but I want a mortgage payment that's $700 a month, then I'd say save that $700 every month, put it into an account, and that's the same thing. As long as you can demonstrate that you can afford that mortgage payment. So rent. So let's take, for example, that I'm paying rent of $700. But I want a mortgage of $1,000, then I would need to show the payment shock, the difference between what I'm paying in rent to what I want in my mortgage. So I have to save that additional $300, or if I'm not paying any rent, I just have to put every month, save that amount of money that I want in the mortgage, save that every month.
Wow. All right. So go ahead. Number 1, no down payment, no closing costs. Number 2, credit score is not a problem. You look at a person's history in terms of paying back things. What other benefits of going through NACA?
So the third is you want to have, in affordable terms. So right now, what's outrageous out there is that based on one's credit score, they charge a higher interest rate. Well, I mean, that's one, you're setting people up for failure because you're charging people with a lower credit score a higher mortgage payment because of higher rates. At NACA, everybody gets the same rate. If you're low to moderate income or buying in a low to moderate income area, then the rate is, today's rate is 3% fixed for a 30-year mortgage and 2.375 for a 15-year. Always fixed. And it's not based on any other factors. So everybody gets that deal out there. So, and that's how it should be. I mean, even when you look at Fannie Mae and Freddie Mac and FHA and all that, they charge all those additional fees. And if your credit score is lower, you get charged a higher rate. And that's predatory. And that's unacceptable. So at NACA, everybody gets the fixed rate, but fixed rate below market. And there's no mortgage insurance. There's no MI. Because if you go through, FHA, you pay 1 or 2%, 2% on the mortgage insurance, no mortgage insurance. That's the deal. And the fourth is that you deal with racism and biases. And the way that you deal with that is you pre-approve people, full documented underwriting. So you're verifying, it's trust and verify. We verify the income, W-2s, pay stubs, verify the assets, bank statements, tax returns, all those things. So you verify it. So that buyer becomes a very desirable buyer for sellers, real estate agents, lenders, anybody, because virtually 100% of the people that apply through NACA go to with a mortgage application are approved. Virtually 100%. Everybody, once they submit their bank application, achieves that house. And when you do it the right way, you do all those four things, then you say, well, what is the results? With over 70,000 homeowners, we have a foreclosure rate of 0.00012, 1/100 of 1%. So it destroys the myth that says you have to charge people more because they have low credit scores or because they don't have income. Basically, that patronizing, racist perspective, we've destroyed that myth that they try to put on us.
This is absolutely powerful. I'd even say prophetic, in the spirit that it provides an alternative to the systems that we see that critique them by doing another thing. I wanted to ask a little bit, Bruce, about the impacts that you see at the neighborhood level. So as Karen appropriately notes, you're helping people to build the cornerstone of wealth, asset building for families that have a generational impact. But as you're doing this in communities, and I know you also do advocacy work around housing, affordable housing, and it has other impacts on neighborhoods. So I just wanted to invite you to talk a little bit about the impact you see in neighborhoods when home ownership takes hold, or when your particular strategy to advancing home ownership takes root in a particular neighborhood, community, or city.
Absolutely. So, it's the investment. It's the investment. I mean, you can see what's going on, and, people spread the word because as you were saying, Karen, you say, okay, as a group, you want to have, a critical mass, but it's also individuals saying, I bought here. So what is really exciting is that people become our ambassadors out there saying it is really true because it sounds too good to be true. Because when we do a workshop, one of the things we always ask at the beginning is, if you were to say you can come through here and get a mortgage that's no down payment, no closing costs, no fees, at a below market fixed rate, 3%, and there's no mortgage insurance, how many people would raise their hand saying this sounds too good to be true? And if they didn't raise their hand, they're not doing their homework because there's more fraud, there's more abuse in real estate and mortgage lending than any other industry that exists out there. So you have to ask that question. Because as you're saying, but it's all about neighborhood stabilization. So one of the things that, we need to do is we need to do a better job of having a critical mass of people in the neighborhoods, because you're exactly right. It has a huge impact in the neighborhoods and in the schools. But look what's going on now, the counter to that. One of the reasons why it's tough to find houses in some areas is not just because they're not building it. It's because the hedge funds and the big money is going out there buying up these properties. And for the first time, we're not seeing them put them back on the market. We're seeing them being massive landlords out there providing really bad services. In essence, they're slum landlords. Whether you look at Invitation Homes or you look at other players out there, we're getting now Wall Street slum landlords. And we have to organize the tenants to take that piece on. And we've got to put the pressure on them to say, we need to have you turn back those properties to home ownership. Because when it's just rental, well, then people are being forced to move every 2 or 3 years. And that's not good for the neighborhood. That's not good for the schools. It's not good for anybody out there. But yes, you're exactly right, my friend. It's around that investment is intangible. I mean, it is, that's the key part. And people will do whatever it takes to keep their home and do it the right way.